Good morning and welcome to this edition of Diwali Blockbuster on Moneycontrol. I'm Mahalakshmi and I have with me a market veteran, Madhusudan Kela, founder of MK Ventures. Madhu, thank you so much for joining us this morning.
Thank you. As always, pleasure interacting with you, and happy Diwali to you and all your viewers and everyone at Moneycontrol.
Thank you so much. Wish you the same to you, to your family, and of course the MK Ventures family.
Thank you so much.
So, there is this Hindi saying ना कि सारी दुनिया एक तरफ जोरू का भाई एक तरफ. इस साल ऐसा लग रहा है कि इंडियन मार्केट, इक्विटी मार्केट एक तरफ और बाकी सब दूसरी तरफ. Gold has done so well, silver has done so well, international equities have done so well, US has done well, China has done well. Indian stock market को छोड़ के बाकी everything has done well. So what do you make of this? Will this sort of continue, or do you see this year with greater level of optimism than last year? Do you think it is time to still wait and watch?
Yeah. So let's put things in the context, right? From pre-COVID lows, post-COVID lows which we made, I think our market did exceptionally well for 4 years, and it outperformed everything which you said.
Correct.
US market, China market, gold, silver, handsomely, right? And this is the 1 year in which obviously we have not performed. So, anything which is, however good it is, can't keep going up in perpetuity.
True.
So I think this kind of a correction after the sterling performance of the market as a whole, which we have seen, is not surprising to someone like me who has stayed through many cycles like this in the last 35 years, right? So that doesn't deter me or make my conviction in any way smaller for the longer term India story or longer term equity story.
Right.
So that is clear, at least in my head. The other point which you make, that is this the time where people should go and buy equities?
Right.
Mahalakshmi, even if you look at last year, when the markets have been challenging, you can find 100 companies or more than 100 companies which have given more than 30% return on NSE 500. Even the market has gone sideways.
Correct.
Or there is hardly a marginal performance.
Correct.
So according to me, the real India story is we need benign markets, right, which are not like, if you make a case the market could go down 20-30% indices, then this whole bottom-up stock specific story also doesn't work in a very classic manner.
Right.
But the market remain by and large benign and even range bound, then the bottom up is the way to play India. And that, I don't think that will change even this year. So the people who are in the sideline are even thinking that should they take out money and should they put money in gold and silver.
Right.
As an asset allocation, of course you should do whatever allocation you feel is fair. But I don't think this is a time to take out money from equity and go lock, stock, barrel in gold and silver. And I'll tell you, see, we've been here for now so many years. Gold has done well. In rupee terms, gold has given good return. But ma'am, you'll agree that there is no real productive use of gold or silver. If I buy a good company, the earning of that company, if I buy a really good company, could double in 4 or 5 years. And it could triple in 5 to 7 years, right?
True.
So that company which I'm buying will become much cheaper purely based on earning growth, and it's a productive asset. It gives the dividend, etc. So in the long run, if you are an investor, I would still make a very strong case that equities should be much higher allocation in your portfolio than gold or silver.
I totally agree, because as an equity investor, you can definitely not justify investing in gold, and from Warren Buffett to whoever it is, will not bat for gold. But then, there are some dynamics and
no, but asset allocation, you need to, of course. And if gold is a fair trade.
Right.
Last 1 year, there was only fear in the world. There are war, there are geopolitical, trade barriers, what could happen. There was dollar debasing, there are lots of fear. And gold works when the fear is maximum.
Would you bet that it will reverse, or you think it will continue to be a steady performer?
I think, the rise on a technical basis is very euphoric. So I would not be surprised if there is a correction at some point of time. it is very difficult to call whether it will go up first 10% and then fall or start falling from here.
Right.
But I am very sure that it could go into a consolidation phase. Specifically, like 5 wars have stopped already, right? Let's say if the China-US trade deal happens and the India-US trade deal happens, that will be the trigger for a lot of calm in the global market, and that could actually be the trigger for gold and
Go to
silver
slow down.
prices to go in consolidation.
Fair enough. So, some immediate things of immediate interest to investors. How do you think the market's going to move in the next 1 or 2 quarters? Because people have been betting on an earnings recovery, especially after this GST cut and so on. Are you optimistic about this
optimistic.
quarter becoming,
I am optimistic at least the next
You're
2
always
quarters.
optimistic.
Next 2 quarters, that is what has worked, ma'am, very well. So I have no reason to believe
Right.
anything otherwise. But I would say I am optimistic that the earning recovery will happen in the next 2 quarters. Very difficult to say whether it will happen in the next quarter, but next 2 quarters. And whatever channel checks which we have done, actually post Navratri, things have been really good on ground. The consumption side of the story, auto, consumer durables, because of the, and government has actually given 2.5 lakh crore rupees of bonanza. First
Yeah.
it came in the form of tax cuts,
Yeah.
then it is in the form of GST. RBI has pumped lakhs of crore rupees of liquidity. They have also cut interest rate to the extent of 100 basis points. Monsoons by and large have been very good. In fact, if at all there has been excess rain, which would have damaged crops somewhere.
Yeah.
But so I think everything is pointing out towards all these headwinds are actually turning into a tailwind. So I would say next 2 quarters earning recovery should happen.
Madhu, if I just look at some of the, secondary market purchases you have made, it's quite a mixed bag. You've bought some, investment kind of stock. Windsor आपने खरीदा है, Pratap Snacks खरीदा है. I mean, it's quite a mixed bag. It doesn't look like there is one particular theme that you're chasing. Is there any, 1 or 2 themes from a public market perspective which you think as a pack can do well over the next 1 year?
If you ask me for 3 years, I can really bet and
Okay.
tell you, but something which will work out really well.
Right.
See, everyone has spoken about financials,
Yes.
pharmaceutical, liquor. We have all spoken, right?
Right.
There's one thing which I am really studying very keenly, that which are the companies which will disproportionately benefit because of the AI usage,
Okay.
and not the companies which are doing hardware for AI and this. That I think the scale of that benefit, Mahalakshmi, and the operating leverage because of these uses could actually be dramatically different in the next 3-4 years than what we have seen. And that entirely need not be passed on to the customer, because everyone will not use
an
AI
efficiency.
to
Right.
to that extent.
True.
So that is one thing which we are actually clearly and see, what if I told you internet in year 2000?
Yeah.
Would you ever believe that that one word can create $25 trillion of market value? Whether you talk of Google, Facebook, everything is a derivative
Right.
of internet, right?
Right. Right.
I feel this AI usage, I'm not talking about making investment in AI stocks. That
Right.
may be in a bubble
Understood.
phase.
Understood.
But this AI usage will continue. That is here to stay. And the companies which are benefiting out of that this could be financial companies, it could be drug discovery companies, it could be some SaaS companies, and that is what needs to be seen. Some of them are there in private domain, in which at least we are making investments very early on. And also here, if you see Indian market, Mahalakshmi has not yet appreciated that. Because on a $5.5 trillion market cap,
Right.
there is not even 20,000 crore rupees of direct AI plays or 30,000 crore rupees of direct AI plays which are there.
Correct.
This number is much higher in America or in China.
Right.
So this is one secular theme.
Madhu, one or
The
two
stock
things.
markets are all about earning surprises.
Right.
If in a company I am expecting that it will be 15% earning, if the general environment की वजह से 18 हो जाए और 3-4% का efficiency हो जाए और 22% हो जाए, stock prices will be very different.
Right. So in the public markets, do you see any big beneficiaries where you can have a significant earnings impact because of usage of AI?
Yeah, of
As per
course.
theme?
All financial
For
companies,
instance?
all financial companies, even large banks. You see, the usage of AI for HDFC, ICICI Bank will be very massive in the next 3 years.
It can be it can
It
contribute
could,
substantially to earnings,
it,
you
cou-
think?
it could reduce their cost base very meaningfully. And that is happening. I'm not saying that it is
Right.
already happening in the world.
Right.
Maybe we are few years behind,
Right.
but it's already happening in the world.
Right. Interesting. So financials, is there any other pocket where there can be disproportionate impact on earnings?
I think a cross sector hoga. If you just tap go to chat GPT na, they will itself tell you which are the 5 sectors which are actually likely to benefit.
Right.
But the question is, I would not go by sectors. I would go by, let's say, the companies which
Which
are
is more
very
progressive.
proactive, very progressive, and
Right.
which is why I am very hesitant to tell you that
Right.
this sector will do well.
Right.
I am saying that it is companies, and there will be A and B. A is someone who will believe, go all out and start this. And B is someone who will still say, जब आएगा तब देख लेंगे. तो वो जब आएगा जब देख लेंगे उसके लिए कोडाक मोमेंट होने वाला है.
Correct, correct, correct. True.
He will not get a chance, trust me.
Right.
I'll tell you, in our office, we are able to produce company reports in 13 minutes using AI. And it is maybe 80-90% as accurate as an analyst would have done. In 13 minutes.
So what is this going to do to the analyst world?
That's what I'm saying. Now we have to realize that people who are still, let's say, not using it versus someone like me who's using it, will clearly have a competitive edge.
Lots of analysts are going to lose their
No,
jobs.
they will not lose their job. They will have to reskill themselves. You know, that there will be, like, till now, we had a cement sector analyst who was basically specializing on cement sector. Maybe that will not be the case. Using AI, anyone can become expert of any sector.
True.
So the broad-based coverage which you can do, and I'm not saying the analyst will get replaced only by that AI report, but they will become more efficient.
Right.
With the same time, you will be able to go and do a lot of channel checks, go and do a lot of groundwork. So we have spent 5-7 minutes. Let me just summarize. I am saying this is here to stay.
Yeah.
We don't really have any direct place, but I can see uses of it, including in my own office, and it making us productive,
Right.
even in the last 6 months.
Fair enough.
Right? So this trend is here to stay. People who will be able to adopt, they could have really large operating leverage, and some companies will benefit disproportionately.
Fair enough. Any other themes? I know that you are a bigger investor in the private equity venture space now, more than in public markets. Am I right? Bulk of your money is going into private
We have
companies
also
now.
invested because the valuations we found, at least in the last 1.5 year, valuations were more benign in private space. And then also we are able to do a lot more work in a private company because of the availability of information. And
Right.
it is a bilateral discussion.
Right.
So the last 1 year, clearly public market valuations were euphoric. There is no
Right.
doubt about it. So last 1.5 year we have invested. But it's not that I have shifted my focus to
Right.
investing in private companies. I
Right.
invest very actively in listed companies, and listed companies still will be 80% of my overall portfolio.
Right. So this year, do you think the equation is changing? You
It
think
is
public
changing.
markets?
It is changing
you
at the
will- this
margin.
The end of next year, you will see more investments in public.
It's changing at the margin. See, I invest my own money.
Right.
So money for me is fungible. If I see a really great opportunity in public market, some of the names which you alluded to, because we see real risk reward in
Right.
some of those companies,
Right.
we will invest.
Right.
Our character is that we will take a real long-term view,
Right.
and we look for a disproportionate return.
Right. Madhu, what is the sense you get when you look at the IPO market today? Because there is a general sense that, markets are, despite the fact that we have had flat markets, IPOs are priced to perfection. And you've had some remarkable exits also. And would you be wary of an IPO market today? If you didn't have those private bets that you are selling, how would you as an investor into public market really think about IPOs today?
So, with full disclosure,
Yeah.
this whatever we're talking is only from educational purpose,
Right.
and there is no recommendation involved of any kind. So, what I'm saying, in my opinion, it is mixed bag. You can't generalize the entire IPO market. Let's say, for instance, I could not invest in LG Electronics.
Right.
But if I had an opportunity to invest pre-IPO or in the IPO,
Yeah.
I would have surely invested.
Right.
You know, so if you are talking, if you got an allocation in something like this, you should 100% invest.
Right.
But at the same time, there are lots of overpriced companies which are coming. There are lots of IPOs, QIPs, promoter selling, which is happening. So you need to be very careful, very, very careful when you are just saying that, and don't get into the momentum. There are opportunities to invest into companies which are listing. There are opportunities to invest in pre-IPO and also in IPO, but on a very selective, on a careful basis. I would say in general, when companies go public, they put their best foot forward.
Correct. Correct.
And hardly too much is left for an investor
Right.
when you go public, right?
Right.
Because the real thing about a banker will be that I will get
Of
you the
course,
best value.
maximize. Right.
So that will not be the best case for the investors, right?
True.
So but for India, it is very good, Mahalakshmi.
Right.
All of this money which is getting raised, right? Majority of that will get reinvested one way or the other.
Even if they are offer for sales, which is what bulk of the
But,
IPOs are.
No, I think if you take the overall equation, that offered for sale will be maybe hardly 10% in the last 2 years. Majority will be reinvested or selling by promoter. And if the promoter also sells, and a private equity also sells, they are all going to recycle it. They invest somewhere else, right?
Fair enough. Madhu, one pocket you were really bullish on was this PSU space after 2020, right? And that trade sort of was not in play over the last 1 or 2 years.
But it worked beautifully.
It worked very beautifully.
I think.
So my question is now, government has stepped off the investment. In a sense, it's de-emphasized the investment, public spending on capex and pivoted towards consumption. Do you think now that there is greater need, I mean, private capex is not coming up in a big way. Do you think there is a case to be made for investing back into public sector companies? You think it will come into play next year? Because that is one easy, I don't know if it's easy or difficult, but one way government can really raise resources to ensure that, it's able to do both. It can hike its spending, it can on capex, it can also continue to give you some sops for consumers
let's say
to
one
do
of
better.
the real pending reforms, I would say, which is pending in my opinion in India, is this strategic sale
Yeah.
of some of the private sector public sector companies,
Yeah.
which are kind of not strategic for government.
Right.
Let's say you can't privatize a defense company,
Right.
but there is no one stops them from privatizing a Steel Authority of India or an
Right.
Arco or where the assets could be sweated much better in private hands, right? So that is what I would watch. Maybe if the growth slows down, government has done GST boost, tax cuts, etc., etc. This could be the next leg which could come up in pending reforms before 2029. If that really happens, even in 1 or 2 cases, it will fire up the whole private public sector space because companies are really undervalued.
Right.
But let's say keep that aside for a minute. Then again, it is a mixed bag, right? Some of the PSU companies are very expensive. Some of them are really cheap.
Right.
So if you are looking at it as an investor from 3 to 5 year perspective, you could still find a lot of private public sector companies which make a very interesting case for investments at this point of time.
In which space do you think? In metals?
Metals,
in banks?
hoga,
Would you
banks,
buy
hoga,
banks?
PSU banks, hoga, which has been one of my favorite.
Yeah.
And we really did a great play on public sector banks.
Correct.
I continue to like some of the names in public sector banks.
Okay. You are also an investor in, some of these very high growth sectors. For example, renewables, you're a significant exposure to that. What are some of those high growth sectors that you think public markets can still deliver value?
So, renewable, for instance.
I'm saying, for instance, that is one. So, what is your take on renewables itself, and which part?
Again, it's a mixed bag, I would say, because if you are wanting to play solar panel or the cell story purely, but that maybe is overcrowded.
Correct.
But if you're looking at BASS, which is battery energy storage system, right? That story is just beginning.
Correct.
Right?
Correct.
And there will be companies which will go the whole value chain and they will do the entire backward integration as it was being done in the solar side. But let me explain in 30 seconds what I see. Lot of solar energy will get produced. There is absolutely no doubt about it. We are producing 75, 80,000 megawatts now in a year. China did 130,000 megawatt in 1 quarter, last quarter, right? So there is a lot of room. So when you have excess energy, and some of these plants will operate at 100% in daytime, the overall PLF may be low because they don't produce energy in the night time, but in the daytime. And that entire power will go to the grid. So there is a potential of grid failure. So you will need, like government has made already compulsory, 20% of the energy produced, you will need a battery storage backup.
That's right.
Right? Till now, it is not there in India.
Correct.
And this entire thing today is imported from China.
That's right.
Or other countries. I see in the next 5 years, this leg will happen in India, wherein there will be incentives which will come for this kind of companies which will be able to set up shops in India. And on a more strategic basis, India needs it. Let's say if we did not give incentive for solar panel or for cell, we will continue to still import solar panel and cell from China or other countries. But now we have made the domestic industry viable. And maybe 3 years, 4 years down the line, they will not need any support. They will be on their own and demand supply will play out. So that the solar value chain will shift, but the overall thematic story is still here to play out.
Sure. So battery storage is one segment you are still bullish on.
It's just beginning according to me.
Yes. And rest of them, for example, you think solar panels, etc., are hitting peak capex cycle?
100%.
The trade is over.
Next 2 years, there will be overcapacity in panels.
So that is to be
avoided.
And
the next 4 years, there could be overcapacity in cellars.
And
but the next 3-4 years, people who have already have the capacity, they will make a killing because clearly there is a lot of government encouragement which is there for these sectors.
So which are the other themes that you think have passed their prime in the sense that they are going through a peak cycle now?
No, so I think, let's say, I don't understand a lot of these high PE companies, specifically the FMCG companies, right, where you're still trading at 70-80 PE for a 10-12% growth. I think from a market perspective, and though these are companies you feel great to own, are proud to own, but very disappointed as an investor that you have not made money. So I don't understand it. And again, because of the vibrancy of the market, I am seeing a lot of regional companies who are able to access capital market are kind of creating regional brands. So the category as a whole might be growing, but it may not be entirely coming to all the larger organized players. So this is something which I don't understand these valuations, so I don't invest in them.
Fair enough. No, I'm asking, some of the sectors that saw really strong growth. For example, railways. Today, defense is seen as a very high growth sector. EMS continues to be a high growth sector. Are these, have they captured value for the next few years? Is it they are avoidables now?
For the sector as a whole, Mahalakshmi, it may not be over because clearly defense remains the priority of the government. But some of the listed companies may be expensive, but there will be opportunity in the private space. There will be opportunity some of the smaller companies which are doing some niche work on defense, right? And we are invested. Unfortunately, I can't take the names, but we are invested in some of these companies which still offer real risk reward in the next 3 to 5 years. So I would not say that defense as a sector has done so well. So they are not everything is investable, and I would not say there is no opportunity available also. So again, it's a thing about, you be able to identify a sector. Finally, you have to be able to buy the right company
Correct.
with the right promoter at the right price.
Fair enough. So what are you really, really bullish on right now? Anything that is really exciting?
So we spoke about AI usage already.
Yes.
So what I'm really bullish on, Mahalakshmi, on an incremental basis is not a sector, but a real theme, which because I travel a lot and I go to tier 3, tier 4, tier 5 cities.
Right.
And because I'm a prop investor, I'm very flexible to buy even smaller companies.
Right.
So some of these smaller companies which are coming from tier 4, tier 5, tier 3, 6 cities are actually, they are so exceptionally hungry and they've never got this kind of capital to invest into.
Is that a
right?
good thing or a bad thing?
It's a very good thing. Because at the end of the day, if you have capital and if you are real entrepreneurship, that is where your real journey starts. Right? So in the last, let's say 4 years, maybe more than 1,000 companies have got listed in SME exchange. Now, they are not all the companies are good companies. Don't mistake me, right?
Right.
But there will be some good entrepreneurs and some good companies, and that is what our job is. So I am saying because of the openness of capital market, capital access has become real. Now it is our ability to find that entrepreneur who can access capital and is very, very strong in execution. I think over the next 3 to 5 years, that is what will make real return. And there will be across sectors. So right now we are actually just, overly busy or working really hard to identify some of these companies which are not very obvious
Right.
to the world.
Right. You mean in the SME sector?
And
in the SME segment?
SME sector, SMEs, even in a larger space. This theme is not only for SME sectors. I'm saying that you saw so many of these new renewable companies got listed.
Yeah.
Some of them you have not even heard the names of.
Yeah.
And now they are taking at 5,000, 10,000, 15,000 crore market cap. They are the real entrepreneurs who have created businesses. And this all being created, Mahalakshmi, in last 5-7 years.
True. So you said, so in this space, Madhu, of course, you are a very experienced investor. You've seen markets for so long. From an ordinary investor's perspective, how would you navigate the space? Because SME is also one sector which is low in terms of compliance. Even your financials you get only once in 6 months. So how do you? Is there
Very
something?
tough,
What
very
is
tough.
what is
For a
what
normal
can be
layman investor, I would not suggest. So either you play it through a fund,
Right.
or you play it through a professional investor,
Right.
someone who has got experience.
Right.
It is not for a novice. I am not making a case that you go and buy all
Right.
SME stocks. Please don't get me wrong.
Right.
Someone like me who's been around for 35 years.
Yeah.
And I have seen so many cycles.
Correct.
And I have committed so many mistakes in my career. So maybe
Right.
I am better equipped today, right, to analyze some of these companies. So unless you have really that either professional expertise yourself or you do it through professional people.
Right.
You don't do it yourself.
Right. Any, one or two lessons that you learnt this year, and what would you like to tell our viewers for the coming year?
So, one particularly lesson was, we were very early in some of these platform companies which got listed.
Right.
And I did invest also in some of those companies, but didn't take a meaningful bet because on the face of it, it looked expensive.
Right. Right.
And somehow I have not been able to buy expensive stocks, right? But I thought it was a clear mistake. Some of these companies we caught really early, I'm telling you, virtually at the bottom. And we did make some money, but did not play the whole hog. So I think just because things look expensive is not a reason for us to not do work or take a bet.
Right.
Even if I took like 2% of my portfolio or 3% of my portfolio
Right.
on those companies and stayed full course, my overall portfolio returns would have been very different.
Okay. So the lesson is that are you becoming more liberal on valuations therefore?
I will.
In that
I
sector?
will be very objective. Just because the company looks expensive, I will not close my mind.
Fair enough. And what is the one advice you want to leave our viewers with?
So the advice is very simple, Mahalakshmi. Believe in the entrepreneurship of India. Believe in the equity markets in the long run. It has made tremendous value for people who have remained positive and who have remained constructive, right? I have seen Rakesh Bhaiya start with a 5,000 rupee
Right.
and made the empire which he has made.
Right.
And there are hundreds of examples of that nature.
Right.
If you see what we can learn from them, we can only learn two things. One, patience.
Right.
And second, long-term, real positive thinking.
Right.
And third, you keep doing your work. And now, some of your viewers may not be able to access it directly.
Right.
So you need to be cognizant about it, that this is not my area of expertise, and I will give it to someone who is an expert and will do a great job at it.
True. On that positive note, let's all be positive for this year. Thank you so much.
Thank you so much,
Madhu.
Mahalakshmi.
Such a pleasure
And
as
thank you,
usual talking
always
to you.
positive and very great interacting with you always. Thank you so much for having me.
Thank you so
and happy
much.
Diwali to you and everyone around. Thank
To
you.
you too. Thanks.